Derek, I'm so amazed that this ADU that you built is making $2,500 a month and basically paying for the mortgage of this house that you have. Congrats to you. This is awesome. Welcome to Office Hours, a tax podcast by Fujikawa Associates. And we're your hosts. I'm Josh Baldovino, one of Derek's clients, and this is Derek Fujikawa, the managing partner of Fujikawa Associates. Derek, how you doing today?
Good, thanks. How are you doing?
I'm good. So today we're talking a little bit of tax strategy, but we're going to nitpick on your own real estate portfolio. Let's just dive right into it.
Yep.
What does your portfolio look like right now?
So currently we have one commercial property out in New Mexico. It's a triple net property. And then we have three midterm rentals. Two of them are up and running. One we're just finishing getting ready to rent out. So the first one we got was in Modesto, California. The second one in Bakersfield. And the one we're getting ready now is in Fresno.
Okay. And I guess what was that time frame? That triple net was how long ago?
Triple net was back at the end of 2020. So
Okay.
right smack in the middle of the pandemic, we decided to buy a property. Ended up working out really well, but yes, we bought that. I think in November we closed in 2020, and that one's been great. And then we bought actually almost back to back. We bought the Modesto property right at the end of December of 2021. Yeah,
Okay.
2021. And then we bought the Bakersfield place in January of 22. So there's a little bit of a story around behind why they were purchased consecutively like that.
I'm going to dive right into that because you've been a CPA for 20 years, but you started real estate investing in the last 3 years-ish.
Yes.
Why was it until 2020 that you felt that you were ready to start investing?
A couple of things. So one was, as a CPA, I do hundreds of tax returns a year, right? And I see tons of different scenarios and different people, other tax situations. And by far, the vast majority of my wealthiest clients are all invested in real estate. So I have seen some horror stories with real estate as well, too. Overall, the vast majority has been at least somewhat invested in real estate, if not very heavily invested in real estate. So that common link there always had me thinking. I don't know if I wasn't ready to pull the trigger. Maybe it's because we had young kids, and it was just hard to really focus on that. But yeah, in 2020, especially with the pandemic and things slowed down and we had time to just sit down and think about things, we decided to jump into it at that point.
Totally. It seems like 2020 was the year of self-improvement. Everyone was working out a lot. If you
Yep.
got
Yeah.
gym equipment or a lot of
Yep.
personal finance books and investing, all
Yeah.
good
Lots of
fun.
time on our hands. Yeah.
So your first deal was a commercial deal.
Yes.
Can you break down why that's different than your normal residential deal that most people would think of?
Sure. So it is commercial has a little bit of higher cost of entry because you can't do a normal FHA loan or anything like that. You can't do a house hack or anything to put a low down payment down. So we basically have a minimum of 30% down on this property. So we really had to come up with a lot of cash to do it. We had the investments even during the pandemic. The investments it took a dip right at the beginning, but really came back. So we were okay on that end. So we just sold some of our other investments and use that to get into that as well as refinancing our house. We had a significant amount of equity in our house. So we refinanced our house back then at 2.5%. And so we initially were looking at just selling the investments and getting a commercial loan. But what didn't really sit well with me, and I know, it's standard there, but most of them were like a 7-1 type of variable rate. It would be fixed for 5 to 7 years and then jump to a variable. And so I wanted a little more stability. Plus, there was a lot of costs to all those. So that's when we started looking into doing the refinance on our house. And so, which ended up being really great because if we do end up holding this for any significant amount of time, we're locked into that 2.5-3% rate versus it potentially jumping up to 7-8% right now. Yeah, so that was, I don't know if it was lucky, but yeah, fortunately we had that equity in the house to be able to do that. So yeah, so there is, but that does make it hard to scale, right? So right now, if we wanted to get into another one, we'd have to come up with another 25 to 30% and look for a commercial loan at much higher interest rates. So that's why we started looking into more residential properties after that point.
Gotcha. I think for most people, residential obviously seems the most relatable because they're only thinking about buying their own house for the roof over their head.
Yes, yeah.
Versus, I'm going to buy, in your case, this commercial building that now has a laundromat inside of it, where the financing, the terms, you're buying a business. And so it's very different. Just break down the numbers real quick on that. How big was this property and where is it?
So it's in Albuquerque, New Mexico. And off the top of my head, I don't remember the actual size. It's like a small warehouse sized building on a decent sized lot, but it's next to a bunch of apartment complexes, and like you said, it has a laundromat there. So I felt like even though it was a small business, it wasn't a mainstay type business like a fast food or a drugstore or something like that. It's in an area with a lot of apartments, and everyone needs to do their laundry. So I figured it could be a nice recession resistant and something that might stick around for a while. So we took a little bit of a risk in buying that, but it's been great so far.
So then break down the numbers for me on that. How much
so
did
we
you buy
bought
it
it for, I believe it was 620.
Okay.
And so that's based on a cap rate. So I
Mhm.
think it was a 6% cap rate that we bought it at. And so we bought it at 620. Like I said, we used some investments and home equity to pay for that. Currently rents for $3,200 a month. And every 5 years, there's a 15% rent escalator. So the goal is, after that first escalator, we're looking to maybe 1031 that into maybe a bigger property.
Okay.
Yeah.
And so for those who don't know, cap rate is basically, we could pause and Google it.
Sure.
But in most layman's terms, it's the ratio in which a business is traded at in a certain market. I think it may be the most common term without going into some crazy jargon. And so every asset class and every market has a different cap rate for whatever that asset is. And that's how you evaluate the value of that business and or property. Okay, so you got it for 620. You got it with a tenant in who is locked in for 15 years?
Yes, 15 years.
Okay, so you're set it and forget it for 15 years, which to most people probably is a best case scenario.
Yeah, that's really nice. I just get a rent check in the mail every month. I talk to them once a year, I send them the property tax bill. The triple net, so they pay all expenses, insurance, property taxes, maintenance, everything on the property, and we just collect the rent, and that's pretty much it. My only expense is the interest that we have on the loan.
That sounds like an easy, I wouldn't say easy, but that sounds like a painless landlord experience.
Yes.
So then you went from this triple net where a lot of people love to just stay in triple net properties to then going to the more, I guess it's the new kid on the block, which is the midterm rental investing. So that's bringing tenants in for above 30 days, but less than a year, usually in furnished rentals.
Yes.
When did that start? How did that start? And what was the first deal?
That started, funny enough, watching one of your podcasts with Jesse Vasquez. That got us really interested in talking about housing travel nurses. My wife's family is almost all in the medical profession, so it's an area that we're familiar with. So we looked into that and yeah, just started looking around at different markets. Actually talked to Jesse directly a little bit at the beginning and ended up buying our first property in late 2021 in Modesto. So that was
Is that the Poplar one?
Yes, Poplar.
Okay, so let's
the main house with an ADU in the backyard.
All right, let's show some of these pictures. So let me share the screen here, and I'm gonna do the entire screen of this one here. So these are your before pictures.
Yeah, so that's the ADU there. This one we almost fully gutted, and that's more the main house there.
Okay.
The kitchen.
Yeah, a little dark.
Yeah.
Man, okay, so you guys are looking at this, and this looks like it needs a significant amount of work.
Yep.
What gave you the confidence to say, all right, we're doing this?
I don't know.
The numbers worked out, obviously.
Blind optimism? No, I don't. Yeah, no, the numbers definitely worked out. That was really what it was the numbers. Just looking at the midterm, even the low end of what we thought we could get would cash flow very well. And with the low interest rates that we got it at the time, even if worst case scenario, if we had to long-term rent everything, we could cover ourselves. So we felt pretty confident that we'd be okay with this property. Even at the time, we didn't know, but it was right before the housing market had started to take a turn.
Okay. So break down the numbers for this one real fast. You bought this house for how much again?
$550.
Okay, $550. And so to turn this from hasn't been touched for at least 20 years.
Yeah.
How much did you put into renovations?
We had intended, but we had budgeted about 50. Ended up spending probably close to 60, maybe even a little more on everything. Part of that was we hadn't intended to, but we just completely gutted out the ADU in the back.
Yeah.
And it was small, so it wasn't too terrible, but that was a little more of an expense that we had anticipated. When we first saw it, we thought maybe we could keep some of the parts of it. We just ended up basically getting it down to the walls, replacing the floors, replacing everything in the kitchen. We didn't restructure anything, but we just
Mhm.
we replaced all the cabinets, all the appliances, and redid the bathroom. Yeah.
If I'm looking at this is so fun, right? You'll notice if you're looking at this right now on YouTube,
Yeah.
is you have the main house kitchen, which is a
Yeah.
very big kitchen, and then you have the separate ADU kitchen. So I'm sure that was already like, oh man, we can definitely do something here.
So that's what
Furnish
we
the main
thought
house.
when we saw that. Yeah. But then when you get in close and actually start opening drawers and look at it closely, we realized, yeah, no, it needed to be replaced. The funny thing that we noticed with a lot of like flips in Central Valley, actually, just all over the place, it seems like a lot of people will just paint the cabinets and then slap on like quartz or granite on top of it. And that's what they did here. And so it looked nice, right? They painted it. It looked really nice, all white, clean, and it had the nice quartz countertop. But then when you open up the drawers, you could tell they didn't have rollers. It was just like wood sliding on wood, and the cabinets didn't hang quite right, and they were all it just
Needed more work.
it needed a lot more work than we were anticipating.
Okay, let's take a look at the afters here. This is the ADU.
Yes.
God, that looks.
So
I would live in that.
so we brightened it up
Really?
quite a bit, added newer. I think we kept a couple of the appliances because they were a little bit newer, but we had replaced some of them, and replaced all the cabinets, redid the floors.
Gosh, and then for the ADU portion, how much did you spend to remodel that portion?
Haven't. So we had one bid for the whole house, and so that was that 50,000
Gotcha. So that was
that we did.
included.
But a lot of the work was done there. I would say probably about half of it was done in that ADU, probably 25K.
Okay. And then furnishing it in total was how much?
Furnishing it about 8,000.
Okay.
Yeah.
Your wife did a nice job.
Yeah. Thank you.
All right. So let's break down some of these numbers here, because obviously this is super cute. Who have your tenants been in this one before we break down the numbers, actually?
I'm sorry?
Who have your tenants been?
Mostly travel nurses. But currently we have a travel nurse in there right now. One tenant was a pharmacist that was relocating into the area. She was actually our longest tenant. She was there for about 5-6 months. And mostly through Furnished Finder. One was through Airbnb.
Gotcha.
But yeah, that's done. That's probably been occupied the most out of our properties.
Yeah, and if it seems like, just because of my own portfolio too, those smaller properties, especially because if you have a traveler, usually the travelers are single people and or traveling with one other person or a friend, and so that 1 or 2 bedrooms works great. When you're at the 4-bedroom, 3-bedroom range, you're trying to find families, and it's less tenants who are looking for that than they are.
That's what we're finding with the main house in there is we're getting groups of travelers together, but they're a little bit harder to come by.
Yeah. Okay, so you bought it for $550. Rehab is about $60. Furnishing, you said in total for I think the house for offline before this call was $20,000. And
About there,
now the after repair value, obviously not 100% comp this out, but somewhere around $650,000 ish.
Yeah, that's about what we believe it is at. Yeah.
All right. But this is the fun part, is the monthly expenses versus how much the potential gross is, right?
Yeah.
So if we're just averaging out the expenses, what's the mortgage on the property?
It's about 2,600. Yeah.
Okay. And then for all the utilities for both sides would be?
It's about 600.
Okay. So let's just call it all in.
Yeah, we pay cable, internet, and then all the garbage, electricity and everything. So yeah, it ends up being about 600.
Okay, so that's about, let's just say 3,000, 3,100. The question probably everyone wants to know is, does it make money? So can you cover $3,000 a month? How much does the ADU rent for?
The ADU rents for 2,500. Okay. It is on the high side, but we've done it. Yeah, we feel like we've done it really well, so we hope that it's worth that much. And then the main house rents for 4,500.
Nice. Okay.
So fully occupied.
Everything is booked.
Yeah.
7,000. That's awesome. Now, obviously, you're going to have a little bit of vacancy here, and then of course some repair costs. But if your baseline expenses is $3,000, and on a perfect month it's $7,000, there's decent spread there. And
yeah,
as long as you're occupied for at least 50% of the time, it seems like you're okay.
That's the numbers that we come up with. Yeah, hopefully more than that, but yeah, at least half the year if we're occupied, then we're covered.
You also have a few other midterm rentals, so let me pull these guys up over here. Sure. You said you have how many midterm rentals again?
3 properties. So this, but 4 doors because the Poplar has, Modesto has the 2 doors. So 3
this
total
one is
properties. This one is Bakersfield.
And
these are the before pictures. So these might not be as dramatic because we didn't do a ton. It's more the furnishings that are going to change really. This one had some work done prior to when we bought it. So
yeah, they just painted it, that's for sure.
Yeah. There's another instance of where they just painted the cabinets, but this kitchen was a lot bigger and it wasn't quite as bad as the Modesto. So we decided to keep the cabinets for now. And then eventually we'll change everything out. But yeah.
And then it is, which one is it here? Not that one. This one, yes?
There we go, yeah.
Okay. So these are your staged photos. Very little work. So what did you buy this one for?
$290.
$290. And then how much you put into rehab and furnishing?
Rehab was relatively low. I would say less than 10K, less than 10,000. Okay. Furnishings, probably about 15.
This looks cute. You guys, again, did an awesome job with the furniture. Love the color combo.
Yeah. We actually inherited that table from my wife's dad. Yeah. And so we actually used that as our piece to build, or she used that as her piece to build around and use more of a Southwest theme for the house.
That looks like a very high quality table. I'm sure that was not light.
No, it wasn't.
That's one way that you can tell. I like you guys didn't have to do anything to the kitchen to still get it rented out. And so this is how many bedrooms, how many bath?
3 bed, 2 bath.
Okay. And what does this one rent for?
This one's $3,400 a month.
Okay. And what's the mortgage on this one?
16, I think.
Okay.
Yeah.
So some decent spread.
Yeah.
And not a lot of work.
Yeah, about $300 to $400 in utility costs on this one. So about $2,000.
Congratulations. These are some awesome units. Let's talk now, of course. You're doing it actually, not just advising on the tax strategy, but you are also an investor yourself.
Sure.
And so let's just talk about tax-wise. Have you done any interesting strategies with any of your properties so far?
Nothing out of the ordinary. Like, not really a point in doing a cost segregation because we don't have the short-term rental exception where we can deduct beyond our incomes. So really it's being treated as a passive long-term investment, which I saw one of your recent reels. It's not really passive, even though the IRS defines it as a passive activity. It's not a passive activity. We're spending a lot of time, more on the front end, getting it all ready. But it's definitely not something where you can just sit back and forget about.
Yeah. I mean, it's only, I guess, whatever the income is categorized at. But how much time would you say that you spend, now that they're running, how much time would you spend, I don't know, per week, per month managing these units?
Yeah, it's hard to say. While we have people in there, it's relatively light on the time, unless something pops up, some sort of problem or something arises. But while they're in there, sometimes we almost do forget that we have tenants in there because they treat it as their own house. It's not like a short-term rental where one little thing goes wrong and they're on the phone messaging you, asking you to fix something. It's their house, so they troubleshoot on their own until something gets really bad. Yeah, so in that instance, it's okay. It's usually the turnover. We manage everything ourselves. We have a cleaner that comes in and does a cleaning, but then we go in and do all the turnover work and make sure that everything is ready for the next guest. And maybe blessing or a curse, but Mari, my wife, is very, very particular. So like when we go to an Airbnb, she'll point out everything, right? You get there and say, "Oh, it looks great," and then after you're there for a little while, like, "Oh, this, and they could have done better." So when she goes in, she wants to make sure that none of those items are there. There's nothing like that when the next guest comes in. So we spend a lot more time than probably maybe some other hosts may spend, and some people may never even notice it. Like personally, I would never even notice like 90% of the things that she notices. But then again, I'm not very observant.
It's always good to have that balance though.
Yeah. So then she goes in. So we do spend a lot of time. Like the Modesto house was vacant for a couple of weeks, and we spent a lot of that time going back and forth, getting ready for the next tenants.
Yeah, I think I'm glad that you guys are doing it. That's also why you are also my CPA, because you're also doing it, which is helpful. And there's it's interesting when you talk tax strategy with some folks is you understand it, but also there's interesting nuances that you just have a little bit more understanding with because you were also doing it.
Sure.
On the commercial side, on a midterm rental side.
Mhm.
You didn't mention it earlier, but you're also a limited partner with us in an apartment complex
Yes.
in
Yeah.
Texas.
Yes. Yes.
A few different avenues there. But I'm glad that you're in it, because when it gets crazy, like today's notification with Joshua Tree permitting just catching on fire,
Yeah.
you can feel the pain a little bit.
Oh
So,
yes. Yeah.
but I'm glad that you're doing it, and the
Mhm.
numbers are working for you. Probably a little bit more
Thanks.
work than we all thought, a little bit, but already now that interest rates have gone up, I really wish that we bought more when interest rates
Sure.
were
Yeah.
down.
Although, yeah, with prices down, it's a good time to buy. So that was our thought with the Fresno property, because
Yeah.
the one that we just bought recently, our timeline was in a couple of years to buy, but with interest rates going up and prices dropping or stabilizing, we thought it was a good time to buy.
And so, what's the overall real estate goal with you then?
The old cliche, financial freedom, but really to allow my wife to retire, or at least maybe take on a different job that isn't so stressful and time consuming, and then maybe even scale back my business. I don't think I'll ever retire, but maybe focus it more on certain areas and not spend so much time. Maybe not spend 100 hours a day during tax season.
Yeah,
Maybe
I
be able
mean,
to go
everyone,
snowboarding when there's actually snow up there.
to have the option is basically why everybody wants to start investing in real estate in some type of income producing asset, because
Yeah.
it's just the flexibility and freedom. Thank you, Derek, for taking everybody into the world of your
Sure.
properties. So, yes, hopefully you could tell that he is actually doing it. And so, if you have questions about your rental properties, whether it be your
Mhm.
long term rentals, your commercial properties, some midterm things, you're playing with a little bit of everything like me. So, I love it.
Yeah, you always keep me on my toes.
In some good ways, some bad ways, I
Yeah.
guess. But if any of you have any questions about your investing and what your tax strategy is, make sure to connect with Derek down below. All of the information to schedule a consultation with him is all linked there. Derek, anything else you want to leave us with?
Just if you have any questions, feel free to DM me or call me. Always available to help anyone out.
I love it. I guess you have more reasons because he's also investing and he can help you with taxes. So could be a valuable resource for you. Anyways, thanks so much, Derek. I really appreciate
All
it.
right.
And I'll catch you guys all in the next one.
All right.
Cheers, guys.
Thanks.